Hello, I'm Dan Passarelli of MarketTaker.com here on the floor of the CME Group. Today in our Market Taker Live Advantage Group coaching class, where we give our students daily option trade ideas, we talked about a trade in GLD. That, of course, is the gold ETF. So take a look at a chart of GLD. So a lot of people, the talking heads on television, have been talking about that gold is a good buy. Why? Because of the dreaded Brexit. Because there's a lot of fear in the market, and the fear mongers on TV, frankly, are really talking that fear up quite a bit. And yesterday, they certainly talked up the price of gold. Now, I believe that in situations like this, some of the fear can be unwarranted, and I think that that move that occurred yesterday in GLD might have been a little bit overstated. Now, I'm not necessarily saying that I think GLD is going to retrace greatly over the next several sessions or even week, but I don't think there's much room for it to go higher. Of course, if the UK does leave the European Union, we could see gold higher, so there is some risk to this trade idea I'm about to disclose. But for me, I like the idea of fading the trade. So the trade that we talked about today in our class was a call credit spread, specifically selling the July 1st expiration 126 calls and at the same time buying the 128 calls. So this is a call credit spread. We establish it for a credit. And the whole idea is that if GLD doesn't rise above 126 over the next 2 weeks, the trade is a winner. Plain and simple. Gold doesn't have to retrace, doesn't have to go down. It could go down, great. It could stay where it is. It could even rise a little bit more before the trade runs into trouble. Until GLD rises through 126, this trade is looking good. Now, let's talk a little bit about one of the other reasons why I think this is a really strong trade. Implied volatility is very high in GLD. We're getting a negative vega position here. That means if implied volatility falls, which if the Brexit vote clears up, then if the Brexit vote doesn't go through and the UK stays in the European Union, then we'll almost certainly see implied volatility fall in GLD. That's going to help our trade as well. Another thing about this trade is I wanted to do the July 1st expiration for this. Why? Well, the Brexit vote is on the 23rd. We're going to get the news of it on the 24th when we start trading here in the US. The news should already be in. But what could happen is if the UK decides to leave the European Union, we could see markets fall. We could see gold rise. But sooner or later, I think people realize that it's going to take the UK a very long time to leave the European Union. In fact, one estimate that I came across says that the UK could be in the European Union until up to 2020. So there's a lot of time here before we really see the effects on the market. So I think there could be some short-term panic, but once people realize what's going on, I think that the markets could rise again, gold could fall again. So I'm giving this trade an extra week just to see how everything plays out and let the fear subside. This is Dan Passarelli of MarketTaker.com here on the floor of the CME Group.